Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, July 30th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice that today the ES is opening lower here ahead of RTH. We have price pushing through the previous session's lows here, which was a narrow doji-like day. Very narrow range in the previous session, D-shaped profile today. We're seeing price go offered through the previous session's low, still mostly inside a narrow 5-day range at the top end of the monthly trading range, so we still have some room to rotate back down. I mentioned before that despite the fact that we were at new highs, if there was a failure to hold 30.20, that could open up a rotation back toward 29.80 ahead of the FOMC meeting here. We have a 2-day meeting that begins today. Tomorrow is the FOMC meeting and the Fed interest rate decision, and that will give us another key level. So again, we are inside this very clear trading range here throughout the month, likely to stay into that range ahead of the meeting tomorrow, and then we could begin to see perhaps some expansion from the range. Today, downtrending so far. We are dropping into the PIMA trigger zone right now, and again, so that could lead to a bigger weakness followed by perhaps a bounce. But overall, short-term downtrending behavior with a downward sloping VWAP would suggest to sell pullbacks at the moment until proven otherwise. All right, here's a look at the NQ. You'll see with the NQ we see similar price action. The previous session had a wider range of movement than the ES, but nonetheless we are still taking out the previous session's low at the moment. We have a narrow 5 to 6 day range that is developed, but upon breaking back below 8K here, we are now rotating back down. Again, we also have a trading range that is developed at these highs over the course of the month, and that range right there is going to provide very nice fuel for the next expansive type of move. So we could be breaking to the upside and continuing this thing. If there's a failure to hold 7,800, that could rotate prices back down towards 7,400. So we'll see how this plays out. We are also inside the PIMA trigger zone at the moment, and again, that type of behavior can lead to strength until proven otherwise. So we'll see how much more downside we have. We perhaps have a test coming at 7,900 ahead. All right, let's take a look now at crude oil. You'll notice with crude oil, we continue to see range-bound action, but for the most part, the last few days have been mostly about upside behavior. We have higher highs and higher lows day over day over the last 3 days. We still have a very narrow range here that is developed. As a matter of fact, if we bring this up, say, on a 10-period average range, so we'll put this as 10 right here, 1, 0, and click OK. We'll see if that comes up on the scan there. There it is. On the indicator here, you see that little magenta line. So it has just now developed a 10-day narrow range. 1, 2, 3, 4, 5, 6, 7, 8, 9. Wait, did I count that wrong? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There it goes. And so that narrow range is very, very important. Anytime you get to about 10 days of range-bound action, that's very compressed, there tends to be an even bigger move that comes out of it. Last time we had a 10-day range was right here. That was very narrow. We got a failed downside break, and look at the move that we saw afterwards. We also had a 10-day narrow range that developed here, and a big breakout move that occurred there as well. So the longer that we're going sideways in a compressed manner, the more explosive that breakout can be. We had been talking about a 5 to 6 handle breakout move that could occur, but now with this 10-day range we can go about 7 handles, 7 to 8 handles now on that breakout. So again, this could be very significant whenever it does occur. At the moment, the prices have been failing to hold above 57s. They haven't been able to get above 58s at all. So it wouldn't surprise me here if this thing fails to hold 57 and rotates back down toward 56 or 55 half. Overall, eventually an expansion type of move will trigger the next 1 to 2 week breakout move. So we'll continue to watch that closely. Okay, let's take a look lastly at gold futures. Right here, gold futures pushed into the PIMA trigger zone and gapped out of that range in the previous session. Was able to hold 1430 throughout the day. It even broke back below it briefly, but quickly bounced back up. And so 1430 has been a very important level here. It's been resistance the prior week. This week it gapped above that zone and is now holding heading into day 2. And overall, this market remains bullish. It continues to honor the PIMA trigger zone. It remains also range bound after the bullish June. And all of that suggests more upside ahead. Again, this LVN right here between 1375 and 1380 remains significant. So even if price were to drop into that zone, it would be a great buying opportunity, although there doesn't seem to be any indication that that may occur, as this market has been showing higher lows and higher highs and continues to remain bullish. So overall, this market remains poised for more upside. Right now, it's still range bound between 1380 and 1460. Eventually, expansion may occur, perhaps beginning in August. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.